Oh my god, what is up, guys? I can't lie, I've been making this video. I made this video about 4 times now. I just really want to get it perfect because I know there's so many of these videos out there explaining liquidity, all of that out there, and I just want to make mine actually helpful. I will say, first of all, this video has to be below 16 minutes, okay? I cannot post a video above 16 minutes. So, I'd have to make a part 2 if you guys wanted a more in-depth explanation. I'll be going over the basics in this one, and I can make a liquidity part 2 after this one. If you guys want me to, please just let me know. Liquidity isn't something that's very hard to understand, but it goes more in depth than what I'm about to talk about today. So with that in mind, let's get into the video, and so I can just stop talking, even though I'm just gonna keep talking. Well, let's look at this handy dandy drawing I have, okay? What is liquidity? Liquidity are essentially lows and highs in the market. That is not it. That is not even that's not it. Okay. Liquidity is buy orders. It's resting buy orders and resting sell orders, and also stop losses in the market. So, let's go over an example of resting buy orders in the market. I have drawn this out. What is it? Well, as you can see, so we have this low here, okay? We have this low. Price ripped. We have a low. Okay? I feel like it's pretty obvious. We have a low here now. Now price comes up. What is it? But now we're overextended. We don't have anything else. Price needs more buy orders to push it, to keep pushing it up, right? So it's ran out of gas. What do? We come back down, okay, and then we eventually come back down into this low where there are resting buy orders, because the market, brokers, whatever you want to say, cannot just fill these orders right at once. All of these institutions, corporations, orders cannot get filled at, like, there will be, orders that aren't gonna get filled. So price comes down and it sweeps these buy orders. It fills these buy orders now again, and price rips off of that. And you can do the same thing vice versa. It's the same thing. So let's just change this around a little bit. Let me delete this. Give me a second. I'll just get rid of it all. So we have a high, low, all right, so as you can see, we have a high now, and we push lower. Now we eventually come back up, and we take these sell orders, okay? We take the sell orders, a high, sell orders, a low is buy orders, sweep the sell orders, sweep stop losses, whatever that may be at that high. And then what do? Say it with me. We push lower. Push lower. Perfect. Good job, guys. That is liquidity for idiots. Liquidity for idiots. Very, very basic knowledge. Doesn't take a genius to understand that, okay? Sweep a high, we push lower. Sweep a low, we push higher. It's a low to high, high to low, right? Perfect. I'm so glad you guys understand. Like I said, if you guys want me to go more in depth, please let me know so I can make a second video. But if you guys understand, then I do not have to make a second liquidity video. I don't care if I do or not. This is not for me. I understand liquidity. I don't need to do whatever. Okay, perfect. Let's get a real world example here now, right? Let's go to age of session just because it's more choppy. Sorry, I'm LARPing. All right, perfect. So what do we have? We have a high. Price is pushing lower. Price comes back up. It pushes back up into this high. There are buy orders resting at the top of this high. What happens? We sell off after we sweep these sell orders, like the high, and we take the sell orders and the stop losses and we push lower. Okay. Same thing here. Just the opposite. Okay, we have a low in the market. We push higher, we're up here, and then, we don't have enough. We ran out of gas, ran out of buy orders. Well, whatever. Come back down into this low, sweep the buy orders, and push higher. See, is it getting a little easier to see now? Like, this is very, very easy, guys. So let's talk about high resistance liquidity. How do we find good liquidity that price is going to react off to in the market? Well, for the most part, it's high time frame and session highs and session lows. So let's go over high time frame liquidity, right? Let's click the 4 hour. So if we have, let's see, I mean, we're on the 4 hour. So each candle is 4 hours, right? Makes sense. Perfect. Look at this low right here. 4 hour low. I'm going to get rid of everything else so it doesn't confuse me. By the way, right now, I am on futures, NASDAQ futures. I am on NASDAQ futures, guys. So let's go on the 15-minute. Whoa. Was I looking at the wrong thing the whole time? Well, I will find a different low then. Huh. Let's go on the 1 hour. Sorry, guys. I didn't expect it to be this difficult to find some liquidity. I mean, just depends. Like, sometimes price, whatever. I'm not even going to blame it on price or whatnot. All right. Look at this. We have this hourly low. Okay. Let's go to that hourly low. All right. This is a perfect example now, actually. So we have this high time frame, the 1 hour, which is a very high time frame. I figure because every candle is 1 hour, right? I feel like we can understand that, right? High time frame. And I said session highs and session lows. This is New York PM session. You can think of New York and AM as the same session. We'll just say New York session. This is New York session right here. This is New York session's low. Okay, it's really New York PM's low, but this is New York's low of the session, which ranges from what? 1:30 to 4:30. So, or sorry, 4. So I just don't know trading. Sorry. So 1:30 to 4. Now, what does price do? Well, first of all, let's look at this real quick. I almost forgot to bring this up. I'm sorry. It is the session low. As you can see, this is a indicator, but at the top of the purple box, as you can see, it has a line. It says New York PM high. If we follow this line, this high is the high of New York PM. Okay, this line, this purple line right here, follow it right here, it is New York PM low. It's the low of the whole session from 1:30 to 4. This was the low, the lowest point of the whole time. So when price came down and we swept this low, this session low, and also high time frame liquidity, it is high time frame and it is a session low. What do? We rip out of it and we keep ripping. There was a lot of liquidity down here. Okay, I feel like that's pretty understandable. We get this. Okay, well, let's do the same thing again here. So we have let me go into replay mode so I don't lose it, so we can be quick. Let's look at this, guys. High time frame high right here. Boom. We're on the 1 hour. High time frame. Now, as you can see, New York PM high. What happens when price pushes into this PM high? What happens, guys? That's right. We push lower. We push lower after we push into this high because it's high time frame. It is a session high. It is high resistance liquidity. Price resists off these points. Resist pushing past, or exactly, yeah, pushing past. You get it. So, yeah, we push lower off of this high, right? Makes sense. It is very easy to understand for dummies, guys. Like, this is so basic. Like, this is, I don't want to talk about, if you want a part 2, that is when I will talk about low resistance liquidity. Low resistance liquidity, I'll talk about it further if you guys want a part two. But low resistance liquidity, price doesn't push off of those points. It actually just targets it and kind of just goes straight through it. So let's say this was low resistance liquidity. Price would target that low resistance and just maybe make a small move down, but we just rip past it. Price just rips through low resistance liquidity. You can look up low resistance, or if you want to study it more, or say that you want another video. If you want a video on low resistance, that'd be great. I'll make a video. This is low resistance liquidity right here. Honestly, I'm gonna be honest. This is right here. I mean, I wish we had a little more, but something like this. Okay, that is all I'm gonna talk about for low resistance liquidity. One more thing that I really want to talk about that I think is actually just very, very important. Number one, make sure you're checking news every single day for things like this. This is how I made $384 on Friday. So, what did I see at 8:30 on Friday? An hour before market opens, 8:30, boom. Do you see this candle? This is the 1 minute. What? Look at this, crazy. We just rip off of 8:30. Why did we rip off of 8:30? Well, because we had news. We had unemployment, non-farm, and average hourly earnings. Well, which is the most important, I'd say, in FE. So we rip, okay? And now what is this called? This is now a data low. So once price ripped off of this, it's a data low, and it is very high resistance liquidity now. So when price pushed into this, okay, this is why I took a short. I took a short on AM. I took a short. It was like right here, and I didn't target. I could have targeted it, and it would have played out. It wouldn't have. I mean, actually, no, because I would have my stop loss here, but it would have played out, and I could have, if I just kept if I had like my stop loss just sitting up here. Let's say for this would have been a good trade, 2.45 risk reward. Then it would have played out down to these data lows. But look at this. What happened after we swept this high resistance liquidity? We pushed back up. Okay, it is very simple to understand. And there's data highs, data lows. Okay, so it could have been the same. It could have been a data high instead, and we pushed lower, and then we pushed back up into it. So I hope you guys kind of understood that. There are tons of liquidity videos if you guys want to watch somebody else talk about it, or want me to go more in depth about it. If you guys liked me talking about it, if you guys were understanding when I was speaking about it, let me know if you want a part two. I would be more than happy to. If there's something that you guys think I could do better on, definitely let me know. This is, I really just want to help people. Like, I don't, obviously not monetized, so this is just to help people. Next, I can go over SMT divergence, I can go over OTE, I can go over fair value gaps, inverse fair value gaps, probably the same video. I could go over, I think I said OTE, I could go over so many different things. Just let me know. I use ICT strategy, so let me know. And I will see you guys in my next either trade recap or my next tutorial. So, see ya.